Hey everyone, Adam Bergman here, IRA Financial. Hope all is well. Going to have a great video today about how you can use a solo 401k to fund inflation. So really, unfortunately, not so excited about talking about this topic because who wants to be in an inflationary period? However, it's important to know what options are available, especially if you have a solo 401k or if you're self-employed and potentially could use a solo 401k to fight inflation. So before I get started, I just want to kind of throw some numbers out about where we stand from an inflationary standpoint. These numbers are numbers I've never seen in my lifetime. So if the CPI, the Consumer Price Index, increased 8.5% for the year ended March 2022, following a rise of 7.9% from February 21 to February 22. The 8.5% increase in March was the largest 12-month advance since December 1981. Okay, that's pretty intense, right? So we're in the highest inflationary period in over 40 years. Okay, so pretty much my lifetime. Consumer price for food increased 8.8% in March 2022. It's the largest 12-month advance since 1981, right? Within food prices, food for home rose 10% and prices for food away from home rose 6.9%, okay? From March 21 to March 22, consumer prices for energy increased 32%. Prices increased for fuel oil 70%, gas 48%, electricity 11%, natural gas 21.6%. Consumer prices for all items less food and energy rose 6.5%. Okay, so what these numbers tell us, and we don't really need the numbers to tell us anything, right? We know the issue. Things are expensive, right? Whether you go to the supermarket, whether you pay your rent, whether you book a flight, pump gas in your car, stay in a hotel, rent a car, try to acquire or lease a new car, good luck with that. Try to buy a new car, a used car, good luck with that. This is a period we haven't been in since 1981. Okay, so the whole purpose of today's video is, okay, now we know where we are. We don't know how long this will last. I'm just a tax lawyer. I'm not sure if this will last another few months. Is this tied directly into the Ukraine-Russia war? Is this tied into supply chain issues with China because of COVID? Will it subside once those two events come to an end? I don't know. All I know is that prices are super expensive. Credit card bills keep increasing. Medical bills increase. The cost of living is getting out of hand, right? For everyone. So I wanted to do a video today to talk about what you can do. So I wanted to start with the solo 401k because I really do believe, especially as a tax lawyer, that this is the best retirement plan for the self-employed and also is a really good tool for fighting inflation. So let's just start with eligibility. Who can set up a solo 401k? Essentially, you need to satisfy two eligibility requirements. That's it. You need a U.S. business, not so hard, right? You kind of know when you're in business. It could be a sole proprietor, single member LLC, C Corp, S Corp, partnership. The form of the business isn't relevant. It's the actual activity. Are you in business? So clearly, you know, if your intent is to make money, even if your business is not a billion-dollar business now, even if it really doesn't have a lot of revenue, if there's the anticipation or the intent to earn income in the near future, then technically you're in business. Now, of course, if the business doesn't generate any revenues for several years, maybe the IRS would argue you're in a hobby, not a business, and maybe they'll disallow some of your deductions, but generally the IRS will give you the benefit of the doubt whether you are in a business. The only gray area is really for real estate. If you're a Schedule E taxpayer, meaning your rental income that you own, you file it on a Schedule C, that means you're arguing that this is, or you're taking the position, it is passive real estate income, passive rental real estate income, and therefore not business, right? Because you're not subject to Social Security and FICA taxes, which is why a lot of real estate investors want to argue their investments are passive and not active. Okay, they don't want to pay the 15 or so percent Medicare, Social Security. And now we know there's millions of Americans that, yes, do treat their business, especially if it's done through a single member LLC, or a sole proprietor, meaning the business is operated in their name, and file a Schedule C, not an E, but a C as in Charlie, and they take the position it's a business. So for those folks who file a Schedule C, then they're in business. If you file a Schedule E, you're not in business, and technically, even though you may think you are, from an IRS standpoint, you're not, so therefore you can't establish a solo 401k. But how could you? Well, it's not that difficult. You'd have to just take some of your income and move it from E to C. Yes, some of that income would now be subject to Social Security and FICA taxes, but it would be treated as self-employment income, and therefore it would be eligible for a solo 401k plan contribution because the activity would rise to the level of a trade or business. So now we know our two requirements. Business. What's the second? The second is you need to, or you cannot have any full-time employees, which means anyone that worked more than 1,000 hours during the taxable year, who are non-owners and are not spouses of owners. So in sum, you cannot have anyone that works in your company more than 1,000 hours that is not an owner or not a spouse of an owner. Okay, so if it's one owner, fine. If it's two spouses, even though the spouse is not an owner, under ERISA law, the spouse is not deemed an employee and thus doesn't trigger the ERISA rules as an employee that will require the plan to move from a solo plan to a ERISA type 401k. Independent contractors are also not deemed employees. So if you pay someone a 1099, they're not an employee, you don't have control over them, they're not a 9-to-5 person, you don't give them a computer, you don't make them wear a uniform. They're essentially a painter that comes in, brings his or her own paint, does his or her own job, and then leaves. Whoever you can classify as an independent contractor will not be deemed an employee. So again, you need to have a U.S. business, and you can have no one that works for the business more than 1,000 hours that is a non-owner or not a spouse of an owner. Once you satisfy those two eligibility requirements, you can have a solo 401k. Now, why the hell would you want a solo 401k? Well, there's a lot of great reasons. And this comes into the topic at hand about inflation. So the first one, I'll just start with contributions. Solo 401ks let you contribute up to $61,000 or $67,500 if you're over 50. And that's broken down into two components. There's the employee deferral and the profit sharing. The employee deferral lets you go $20,500 if you're under 50, $27,000 if you're over 50. Those can be done in pre-tax or Roth. Profit sharing, the employer contribution, 20% of your net Schedule C if you're a sole proprietor or single member LLC, or 25% if you're a W-2. So let's take an example. You make $40,000 under 50, single member LLC, you have a business. You want to max out. Solo K will let you do $20,500 plus 20% of 40, another 8, giving you $28,500. A regular IRA will just give you $6,000 or $7,000 if you're over 50. A SEP IRA, which we've all heard about, seems like a popular retirement plan, that only gives you a profit sharing component. There's no employee deferral component. So that will give you 20% of the 40 or $8,000. That's it. Whereas the solo would give you that $28,500 because you have the employee deferral and the SEP. The simple IRA, just $14,000, and there's a $3,000 catch up here over 50. Okay, so again, the solo K will beat the SEP IRA. Why does that matter? Well, contributions, number one, reduce taxable income if you do them pre-tax. So that will give you more cash flow because you'll have more deductions, hopefully a bigger refund. So more cash flow means greater ability to fight inflation. You have more money in your pocket, pay bills. That's number one. Number two, solo 401ks allow you to do alternative assets like real estate or gold. So not only do you get to contribute more and get more deductions, take money out of Uncle Sam's hand and put them into your pocket in a 401k, you also can invest those assets into assets that are hedge or are recognized as a valuable hedge against inflation, like real estate, like gold, or some other types of funds. Why? Because if we're dealing and looking, staring in the face of inflation, we want to also kind of think about how we're investing those assets. Again, I'm a tax lawyer, but from experience, I know the more I can deduct, less tax I pay, the more money I have in my pocket, Plus, if I can still use a retirement plan to diversify, take some money out of the equity markets, which have been getting hammered, and getting them into assets like real estate or gold that perform well in inflationary times. Real estate's a hard asset. It appreciates. Also, you get rental income if you have a commercial residential building you're renting out. Those leases are generally short term. So as there's inflation, you can increase your rent, whether it's commercial or residential. So you have flexibility there. Plus the underlying asset will also increase in a period of inflationary times, which we are certainly living in now. So the Solo K, just on the contribution side, is going to give you the dual benefit. High contributions, maximize tax savings, reduce taxable income. At the same time, ability to diversify if you set up a self-directed solo plan. Now, let's talk about the loan. The loan is really the core of today's video. The solo 401k loan, if you use a document like IRA Financials or some other companies in the space, you will have the ability to borrow $50,000 or 50% of your account value, whatever's less, and use that for any purpose. Okay, so if you have 100K, you can borrow 50K. If you have 40K, you can borrow 20K. If you have $1 million, you can only borrow 50. Now, the loan is a tax-free, penalty-free loan from the plan to you. You can do anything you want with the money. You can use it to pay credit card bills, go on vacation, pay medical bills, have cash in your pocket, improve your business, improve your home, help pay for kids' expenses, whatever it is, doesn't matter. You have free reign over that cash. And you get tax-free, penalty-free use of the cash, which is awesome. What's another amazing advantage of the loan? You're paying yourself back. So instead of taking a $50,000 loan from a bank or a credit card company or some of these payday loan companies are going to charge you exorbitant amount of interest, the plan's charging you the interest. So you're actually paying yourself back, not a credit card company, not a bank, but you. So not only do you get tax-free, penalty-free use of the money, you can use the money for any purpose, but you're paying yourself back. The minimum interest rate as of today, May 25th, 2022, is 4%. It likely will go up shortly as the Fed raises interest rates. Okay, so generally hovers between 3 and 5%. That's where interest rates have been over the last 10 years. That could change, right? So if you want to lock in a low interest rate, it's a good time to do a loan because the rate will go up in the coming months. Now, can you charge yourself more interest? Yes. Let's say you're in a position where you're like, yeah, I can pay 6-7% back to my plan. Why would I want to do that? Well, my plan's going to have a better rate of return. I can handle the interest. You can pay it back weekly, quarterly, monthly, whatever you want. You just can't go more than quarterly. So it's got to be paid back at least 4 times a year. You actually do have a chance to correct during that year if you miss payments. You just shouldn't correct after the year. But you're paying yourself back. And it's a straight line loan. It's a 5-year loan, straight line. So interest and principal are combined. And you can pay it back, as I mentioned, weekly, biweekly, monthly, quarterly. And you have a chance to correct during the year if you kind of miss a payment. But overall, during times of economic despair, financial crisis, going back to 08, 09, 2010, today, the loan is a valuable tool. Trust me, I've seen it. I've helped hundreds of clients. And we have over 6,000 solo 401ks. And unfortunately, I've been in this business a long time, 12 years. I've seen good times. I've seen really crazy times, whether it was the beginning of COVID, whether it was financial crisis, 08, 09, and the outcome that caused. It's tough, right? We haven't seen inflation like this in 40 years. Go to a restaurant. I mean, I just took my family this weekend, went out for dinner. Like I paid $22 for a glass of wine. And I think I told the story. They redid the menus because we've been going to this restaurant for a while. And I went to the waiter and I said, well, everything's the same. You didn't change the dishes. Why do you redo the menu? It actually looks the exact same as it did 3 months ago. And the gentleman responded, yeah, we raised all our prices. And I was like, how much? He's like, a lot, 20% in a lot of cases. So the wine, they raised in some cases 40%. Because I couldn't believe you couldn't get a glass of wine for less than $20. Again, this isn't like one of the most glamorous restaurants in Miami where I live. It was a nice restaurant, but my kids got pasta and pizza. It's not like we went to a steakhouse or a seafood place, right? It was a restaurant. So everyone's feeling it. Everyone I talk to, clients, friends, family, it's inflation. It's like, oh my God, you rent a car lately? I just booked a flight. Oh my God. Hotels used to be X, now they're Y. I can't believe it. So the Solo K is a great tool and a great way to fight inflation. It really is. The high contributions, the ability to diversify through alternative assets like real estate, gold, and also the loan. The loan is super key. So you may be listening or watching this and saying, hey, what's the deal? I have a self-employed business. Okay. I don't have a Solo K yet, but I also have a full-time job. I work at Apple or Google, but I have a side business. Can I still set up a solo plan? The answer is yeah, you can. You can be the CEO of a major Fortune 500 company. It doesn't matter. If you have a side business, whether it's selling shoes on eBay or selling art on Etsy, or I mentioned this multiple times. I have a client that's Santa Claus for 6 weeks a year. He makes a couple grand. He's self-employed. That's what he does. Files Schedule C. He has a Solo K. What does the Solo K do for him? It really serves as a way to contribute a couple grand a year, which he's fine with. But most importantly, it serves as a vehicle to do investments. He wants the alternative assets and the loan feature. He was able to roll over pre-existing former employer 401k funds, some IRA funds, and uses the Solo 401k as a retirement vehicle for investments, but also a vehicle to do a loan, which comes in handy, right? We all go through issues financially, right? You don't have to do it all at once, right? Let's say you have 100K and you just need 10K. You can do that. No problem. You can do multiple loans. You just can't go above the 50,000 or 50% of your account value, whatever's less. And once you pay the 50K back, 12 months later, you can do another 50K. So it's good to space it out. You can take 10 now, 20 next year, 15 the year after. So you always have cash available to do loans. And again, you're paying yourself back. So it's just a really good tool to use whenever you need some cash versus taking advances on credit cards or margin on your stock portfolio or more home equity. This is a nice little way to grab some cash here and there. Now, you can't get $1 million, but for most of us, 10K, 20K, 30K, like that helps. That gives us that cushion for the next few months to cover these bills that kind of, for example, like my air conditioning bust. A few months ago, it's like, oh man, I got to spend $8,000 to fix it. That sucks, right? Like not everyone has the cash flow to do that. So the loan comes in handy. Trust me. I've seen it over the last 12 years. It's an option. So the whole purpose of the video is to just educate people that, hey, this is out there. You don't have to go to these payday loans and pay 30% interest or, beg family members for money. If you have IRA out there, if you have former 401k funds out there, and you have a side business, again, the side business could be part-time. It could just generate $200 a year, $500 a year. It does not need to be a Fortune 500 profitable business. You can set up the Solo K, use it as a vehicle for investments and also for the loan. I have a number of clients that have just set up the Solo K really as a loan vehicle, and that's fine. The intention, hopefully they'll use it for other purposes, but from an IRA standpoint, the idea is that when you set up a solo 401k, the intent is it's for long-term. It's permanent, right? So things happen, right? So you do a loan this year, maybe in 2 years, you're going to make contributions. It's okay. You don't have to do everything at once. There's no requirement to make contributions to a 401k. They're elective. Okay, I suggest making them once every 3 or 4 years just to show that the plan's operational, but there's no requirement. So all in all, if you summarize the last 15 or so minutes of what I'm talking about, understand the solo 401k eligibility. Okay, if you don't have one now, understand you may be eligible for one, even if you have a part-time gig, even if the gig makes $500, $1,000, tutor kids, you're selling stuff on eBay, just making $500, $800 a year, you still can have a 401k. If you have rollover IRA funds or former employer 401k funds, or if you're over 59 and a half, you will have access to your current employer 401k. So a lot of people don't realize and say, hey, Adam, I'm 45. I work at XYZ company. I got 50K in a 401k. I want to set up my own solo K. I have a side business. I'm just going to pull that 50K out. And I have to remind them there's something called the plan trigger and event rules. If you work currently and have a 401k and you're under 59 and a half and are still employed, you're not going to be able to touch those funds. And I always get the response, what are you talking about? It's my money. Of course I can touch it. Unfortunately, the 401k plan rules are different than the IRA rules. In the IRA rule, there's no triggering events. You can roll out, transfer IRA funds, even take distributions anytime you want. There's no requirements to hold it in the IRA. 401ks, they do. Those requirements unwind once you leave your job or over the age of 59 and a half. So let's say you're 45 and worked at Google and now you go to Apple, you'll have a triggering event and then you can do a rollover to an IRA or to a solo 401k tax-free. Direct rollovers can be done unlimited, they're tax-free. And indirect rollovers, when you take possession of those funds and then you have 60 days to roll it to another retirement account, that can only be done once every 12 months. But otherwise, most people will have former employer 401ks or IRAs, and then they can set up the solo K, fund it tax-free from the rollover, and then use it as a loan vehicle and also as an investment vehicle, and hopefully down the road also to make contributions to reduce your taxable income, get more cash in your pocket, and have more money in your retirement plan versus in the hands of the government. So I think that's it. Hopefully, inflation subsides in the short term. My concern actually is stagflation. My concern is that Russia, Ukraine, that gets handled. Supply chain issues get resolved with China, so inflation comes down a little bit, but the economy gets into a recession. We've already seen Fortune 500 companies like Facebook, Netflix, Twitter announce that they're on hiring freezes. Could that be a trickle down for the rest of the economy? Then we could get into this really, I think, worst case scenario situation where you have some inflation because of supply chain, because of price of gas, price of consumer goods, but you also are in a recession where there's no growth and people may not be earning as much as they did in the past or losing their job, God forbid. And that's worst case scenario. God willing, we're not going to get there. But again, having retirement funds help. The money grows without tax. Deferral helps you save faster, save wiser, have a larger retirement nest egg when you need it. Taking distributions from an IRA generally are taxable. If you're before 59 and a half, tax and a 10% penalty. Over 59 and a half, tax. If you have a Roth IRA, you can pull the contributions out anytime you want. But to pull the earnings on the contributions, which is the juice, which we all want to touch, you need to be over 59 and a half, and the Roth must be opened at least 5 years. So there's requirements there to satisfy in order to get more tax efficient distributions from an IRA. The loan in the 401k is the most tax efficient way to get up to 50K tax-free, penalty-free. Use it for any purpose, and those funds are going back into your plan. So let's say you do a 50K loan, you pay 4% interest, you're getting an extra 5, 6K back into your plan over 5 years. So after 5 years, you're going to have, let's say, 55, 56K. You got tax-free, penalty-free use of the funds for 5 years, hopefully help with some cash flow, pay bills, and you paid yourself back. So it's a win-win. Everyone wins. Your plan benefits, gets the 4% rate of return, which honestly, the way the S&P 500 is, the Dow, NASDAQ, the way cryptos are, gold, 5%, 4% is good. Like, I'll take 4% right now. If you told me January 1, Adam, give me all your assets, I'll guarantee you a 4% rate of return in 2022, like, sign me up. I think pretty much everyone would do it. So your plan would get the 4%. You get tax-free, penalty-free use of the cash. You can do anything you want with it. Plus, you have a retirement fund. You have a retirement plan. You can do alternative assets, traditional investments. You can also contribute to it to reduce taxable income. It's a win-win, right? And for the loan feature, that in itself beats the SEP IRA and the simple IRA, which do not have any loan features. So there you go. That's how a solo 401k could help you fight inflation. Hope you guys enjoyed today's video. I tend to do these every Wednesday, so check me out. If you got nothing going on or just have some free time at lunch, great. Love for you to join me. Otherwise, you can just watch whenever you want on YouTube. So don't forget to subscribe to the IRA Financial channel. We generally drop 3 podcasts, 5 videos a week, plus this, obviously, YouTube Live. So there's tons and tons of content. Whether you're bored, can't sleep, or just can't get enough of self-directed retirement information, this is the channel for you. Trust me. You're not going to find a better channel. All the content you want This is what I do. I spend pretty much all my day writing, doing videos, reading, educating myself, and talking to really smart people on good video topics so I can help all you become better self-directed retirement investors. So that's it. Have a great rest of your day. Thanks for spending some time with me today, and take care. Cheers.